Thank you for joining Mayor Brown's Investment Management webinar. Our program today will focus on essential business designation orders and regulatory guidance in the United States. I'll cover a few administrative matters and then we'll get started. First, at the bottom of your screen, you'll notice that there are multiple application widgets you can use. Answers to some common technical questions are located in the Help widget. If you're applying for CLE credit, you'll need to record the alphanumeric code provided during the program on the affirmation form found in the Resource widget. Also in the Resource widget, you'll find a PDF of recent thought leadership that is applicable to today's topic, as well as a link to our investment management blog. Finally, we'll plan to allow time during the program for questions. To submit a question electronically, please use the Q&A widget. If we don't get to your questions during this webinar, we'll make every attempt to follow up with you afterwards. So with that, I'm pleased to introduce today's speakers, Leslie Cruz, Stephanie Monaco, Marlon Paz, and Matt Rossi. Let's get started. Matt, I'll turn it over to you.
Thank you, Rebecca. Over the last few weeks, we've seen states across America issue a flurry of executive orders, the kinds of orders that I think would have been unimaginable to most people even a month and a half ago. Orders commanding people not to leave their homes and directing businesses to close. For example, California and Illinois issued orders requiring all persons to stay in their homes. In Illinois, all businesses and operations must cease all activities within the state except minimum basic operations. In New York, employers must reduce their in-person workforce by 100%. Now, all of those orders contain significant exceptions, and most relevant here are exceptions to the stay-at-home and business closure orders for essential businesses and essential functions. Those exceptions typically apply only to certain businesses that are deemed essential, and within those businesses, only to the functions that are essential to those businesses. And the workers themselves, so it doesn't mean that if a business is deemed essential that it can conduct all of the operations it normally does, but only the essential functions. And under the exceptions to stay-at-home orders that allow workers to travel to and from places of work, it's those workers that are necessary to carry out the essential functions. It's also worth noting that typically the way these orders work in the states that have issued them, and there's about, 29 of those orders at least that have been issued so far, all businesses are required to telework to the extent possible. Businesses that are deemed non-essential must typically close their in-person operations, and essential businesses may carry out their essential functions on-site to the extent it's necessary to have people on-site in order to carry out those functions. If those functions can be done by telework, then they need to be done by telework. It's unfortunate, however, that much of the guidance issued by states for what is an essential business, what's an essential function, what's an essential worker, is generally vague. The exceptions, like the orders themselves, are hastily written, reference generalized categories of functions and workers that are deemed essential, and they're being revised frequently. And perhaps most troubling of all in some respects, is that very few of the states have issued guidance addressing investment advisors specifically. But there is some guidance that's helpful. Many states rely on guidance issued by the Cybersecurity and Infrastructure Security Agency, which is part of Homeland Security, and CISA has published a list identifying essential sectors in the economy and essential workers within those sectors, and that includes the financial sector. And again, none of them specifically reference investment advisors, but one of the essential sectors is the financial sector, and that includes providers of investment products, financial institutions, providers of products that allow customers to invest funds for both long and short periods and transfer financial risks between customers. And employees within that sector who are deemed essential are those needed to provide, process, and maintain systems for processing, verifying, and recording of financial transactions and services, including payment, clearing, and settlement, as well as certain capital markets activities. Workers who are needed to maintain orderly market operations to ensure the continuity of financial transactions and services are considered essential as well, as are workers who support financial operations in those staffing call centers, such as staffing data and security operations centers, managing physical security, or providing accounting services. Now, none of those specifically referenced investment advisors, but based on that guidance, it seems reasonable to include certainly that some middle and back office personnel would be deemed essential workers. People needed to actually execute transactions, receive orders, do clearance and settlement, if necessary, perhaps valuations. IT staff needed to oversee computer operations, facilitate the ability of other employees to work remotely. Mailroom staff needed to open and distribute hard copy mail, customer service centers, things of that nature. But again, that's only to the extent that those functions cannot be done remotely. In the states that generally rely on the CSIA guidance, the big states include California, Massachusetts, Pennsylvania to a degree. Other states have issued their own guidance, like New York. And in some ways, New York is perhaps even less clear. In New York, there's a requirement that employers reduce their on-site workforce by 100%, except as needed for essential businesses or to provide essential services. And in determining what services are deemed essential in the financial sector, New York has issued guidance stating services related to financial markets, which are essential businesses according to New York guidance. But it's unclear what exactly is included in that, and whether that includes investment advisors. So from a practice point perspective, it makes sense, I think, with respect to New York, for an investment advisor, operating with a minimum number of staff doing critical middle or back office operations. It's unlikely from a regulatory perspective that action would be taken against the investment advisor who is doing that. But anything beyond that, I think, is really not certain, at least under the official guidance from New York. And I know Marlon is going to talk in some more detail about New York in a moment. One other idea to keep in mind is employees traveling to and from work may appreciate carrying a letter from their employer indicating that they've been deemed essential workers. Some states actually have issued guidance saying that that's not necessary. Other states have issued guidance, like New Jersey, encouraging employers to provide that kind of documentation to their workers. And whether it's required or not, I think it's something that will provide assurances to employees that if they should be stopped on their way to and from work, they've got the backing of their employer and something to show law enforcement in the event they get stopped. Employees should also carry their IDs when traveling to and from work for the same reason. And one additional piece of useful guidance is that states have typically provided email addresses to which businesses can send inquiries if they're unsure whether they constitute an essential business or not under the definition. They can get guidance, and even if they clearly fall outside of the definition of an essential business under published guidance from the state, many states have a procedure where they can request waivers of that restriction and be designated an essential business if they feel that they're entitled to that.
Matt, it's Stephanie here. If I could just interrupt with an observation or a question to drill down a little bit for investment advisors. We have heard of advisors that are struggling a little bit with their Bloomberg terminals. The analysts and the traders that are executing transactions frequently are using their Bloomberg terminals in order to do that. I've looked at a number of Bloomberg contracts, and it would seem that it is quite costly to have Bloomberg terminals moved or new ones installed in people's homes, because inevitably that will result in a new user license and additional compensation to Bloomberg, additional fees. I think that it's our view, as we've discussed earlier, that in the states where arguably investment advisors could be construed as essential businesses, that if the traders and the analysts and people who are connected to their Bloomberg terminals, if arguably the advisor is an essential business in that state, and the employees were comfortable going into the office, of course, regardless of essential designation or not, the social distancing is a must, as well as other necessary precautions for the health of employees that do go in the office, taking temperature perhaps, wearing gloves and masks. Do you think that a connection, a need to use Bloomberg terminals that are located in the physical facilities of the investment advisor, that those people might be considered, it would not be unreasonable to consider them essential personnel?
Yeah, I think it is reasonable to consider them essential personnel, particularly if their job functions fall within essential services, which I think under the states that rely on the CISA guidance, there would be a good argument that they can, but obviously social distancing and things like that is critical. One potential risk, if employees are made to come in and argue that they do not fall within the category of essential workers, and put together an argument they shouldn't have been required to come in, contract COVID-19, and have bad outcomes, there is the potential for liability there, and that's something which has to be factored into the equation as well.
Right.
Marlon, what are your views from the broker-dealer side on all of this?
Thank you. As Matt noted, the growing number of states and localities that have issued these workplace restrictions as part of their efforts to prevent the spread of the disease, or the so-called shelter-in-place or stay-at-home orders, really should be carefully reviewed. I know that as many of us have been working to adjust to this new normal, we've been looking at a number of things fast and furiously. We're going to talk about some operational issues, but let me spend a moment to talk about specifically the broker-dealer considerations here. Now, in order to assist its members, FINRA has compiled a list of the states or jurisdictions, and it urges members to closely review the applicable state and locality orders, and in particular, the impact of those orders on operations, and to make any necessary changes. Now, I will tell you that those of you in compliance and legal, are keenly sensitive to the difficulties there and the potential proverbial rock in a hard place that puts the member firm. We encourage a careful reading. Now, we know that there's support from the Treasury Secretary to identify financial services sector workers as essential and, quote, critical infrastructure workers in response to this emergency. FINRA also has noted as much. And Matt made reference to the Homeland Security guidance and memorandum earlier. The restrictions, however, in place in many states vary quite significantly. California does mention banks and financial institutions. Illinois mentions financial institutions, and it specifically includes certain categories. I want to drill down in New York for a moment. Banks and related financial institutions are included among essential businesses. It also includes services related to financial markets. Of course, I will note for those careful readers that broker-dealers are not specifically mentioned in that category. It would stand to reason that a broker-dealer standing as quote-unquote essential in New York is attributable to providing a quote service related to financial markets. And so I would carefully analyze not the entire entity, but whether that particular worker's function is related to financial markets, and can it be done, must it be done in person? So this would be, according to the Homeland Security guidance, workers that are needed to provide, process, and maintain systems for the processing of clearing and settlement of securities, for example, or the movement of checks. But more on that later. Regardless of the basis for being deemed essential in New York, I think our advice to you or encouragement to you is that you pay careful attention to which employees are required or permitted to work, and only have those who are critical to the fundamental operations of the business allowed to come into the office. In addition, if they are allowed to come in, you should equip those persons with a letter so they can commute, and also ensure that the workplace has, meets the minimal CDC guidance, and possibly more, by the way. And some businesses are doing quite a bit more. New Jersey, of course, has its own as well. So we just mentioned a few of the states, but overall, the message to you is read these orders carefully and look for guidance where needed. We shouldn't assume that the entire entity is in as essential or not. You should look at the function, and then number two, look at whether that function can be done remotely, or if it requires an in-person process. Stephanie, I will turn it back to you.
Sure. Are we advancing this slide now?
Yeah, well, I think we can open questions. If we have questions on this topic before we move on to enforcement and OC. Okay. So I don't see any questions popping up. Obviously, continue to populate the Q&A widget as you may think of questions on the first topic. But yes, let's move on to topic area 2, OC and enforcement, and back to Matt on that.
Thanks, Leslie. So I want to talk for a minute about the current status of the SEC's exam program and operations in the enforcement division. The SEC claimed in published guidance that OC and enforcement remain fully operational, and for the most part, they are. Exams in process are continuing. OC is issuing deficiency letters and demanding responses. It's initiating exams, and enforcement investigations are moving forward. But OC and enforcement have some of the same obstacles as do the industry and everybody else. Members of staff have tested positive for the COVID virus in headquarters. That happened a couple of weeks ago, and the agency quickly moved to remote working arrangements. But I think what that means is that OC in most cases is going to conduct examinations remotely, completely off-site, although the agency has said there may be very rare exceptions. OC is likely to focus on completing existing exams and then moving forward with high-risk examinations. It's also, and we'll talk about this in a little more detail in a moment, conducting outreach to the industry. So, you may get contacted by exam staff, either from the home office or regional offices with a variety of questions, but that doesn't necessarily indicate you're about to be examined. OC has also said that reliance on some of the COVID-19 regulatory relief the agency has issued, such as extending deadlines for filing updates and amendments to Form ADV or filing Form PF, is not something that the exam staff will consider a risk factor in determining whether or not to commence an exam on an advisor, or where in the exam queue an advisor should be placed. And enforcement is operating largely in the same way as OCIE, that is mostly remotely. They are issuing opening new investigations. They are issuing document requests and relying heavily on moving investigations forward based on documents that can be produced and delivered electronically to the agency without in-person contact. They are trying to work out arrangements for taking testimony. They put off lots of testimony. The directors encourage the staff to look at all of their cases and identify which ones involve ongoing misconduct that could harm investors or have statute of limitations issues and prioritize those. The staff is asking in some cases for extensions of the statute of limitations on particular matters. They're trying to work out the taking of testimony remotely rather than in person. There are some issues with that they're struggling with, like under SEC rules, anyone who comes in for testimony is entitled to have counsel present. And does that mean counsel and video one place and a client somewhere else, and a SEC enforcement attorney in a third location, all connected by video? Is that really present for purposes of the rule? So they're struggling with those kinds of issues, but trying to move forward as much as they can, given the current circumstances. OCIE, I think, is also. Sorry, Steph, go ahead.
Yeah, well, I just wanted to go back to OCIE, so I'm glad you started your sentence before I rudely interrupted you. So we have clients that are in various phases of examinations. And one thing that I have found interesting and would be interested if others as a presenter, other presenters have the same experience, that where the exam is obviously the field segment of the exam, the on-site segment is over, but you're now in a phase where you are receiving additional requests externally from the staff before they're prepared to write the deficiency letter, give an exit interview, and complete the exam. It's very interesting that given the circumstances, whereas they may have, just as a matter of routine, asked for and asked to see a business continuity plan, now they're specifically asking for those and asking more pointed questions on how detailed they are and the extent to which people are complying and the BCPs are working as expected. I'm a little cynical, and I feel that the reality is that a BCP is not likely to be found deficient unless there are any problems that the SEC encounters or that might be reported to them, and in which case the staff will easily jump to a business continuity plan that is deficient and pursue that.
Steph, let me add to that in fact, the OCIE staff, they're specifically asking about the COVID response in connection with the BCP inquiries.
Right, but even the SEC, if they were to try to eat their own cooking, they don't have a COVID-oriented business continuity plan. That would have been brilliant.
Agreed, and I agreed. I think I just want the audience to understand that if they receive COVID-specific questions, not to be surprised, because we're seeing that being rolled out in the OCIE exams.
Right, and just because they're raising that doesn't mean that anybody needs to feel anxious and nervous that they didn't have a COVID-oriented business continuity plan.
Yeah, if I can just add to that, I think it's highly I would think it's highly unlikely that at the time the outbreak really took hold in the United States, that there were too many investment advisors that had COVID-19 specifically written into their business continuity plans. And I don't think the FTC really expects that either. And I think some of the inquiries have been more, what parts of your plan are applicable to something like this is I think, more what the SEC would expect. In other words, a long-term interruption of the ability to operate on site. And they would point to the adopting release in the compliance rule that talked about the importance of business continuity plans as part of the required compliance programs. So, I'm too nervous that if they don't have a COVID-specific plan, that's going to be deemed insufficient.
Right. I think it's an information-seeking exercise, and if I'm going to try to sort of, glass half full approach, it's information-seeking and hopefully trying to identify where further assistance might be needed for investment advisors from the SEC and its staff. Right. I mean, ideally, that would be a very, that would be a good endeavor as opposed to a gotcha moment. I know that, right, and Steph, you and I have talked about this, that Chair Clayton has said publicly that, nobody expected this, nobody planned for this, and there's a recognition of the fact that this is unprecedented. I would hope at the end of the day, when we look back on this in hindsight, and specifically when the SEC and its staff look back on all of this in hindsight, that those words will actually, ring true in how OC reacts, how enforcement reacts. I would think so. I think that if there are wholly deficient BCUPs based on standards pre-COVID, right, that certainly that's going to get higher, I think, more attention than other. It's just we've got more light on BCPs now than we ever have, and so I think that there'll be expectations and hopefully guidance going. BCP should look like, given the fact that we now know that we have pandemics potential pandemics in the future.
Well, I would hope so too. Cynicism notwithstanding, and I am still fundamentally cynical where it comes to the examination staff saying, yes, we're here to help you. It's reminiscent of the Twilight Zone where the aliens come and say, hand their book that says to serve man, and at the end you learn that it is a cookbook. But cynicism aside, the SEC's own actions have clearly been in recognition of the difficulties the industry is having, and I would direct everyone on the call to take a look at the attachment, which contains a number of alerts that we've all written on SEC initiatives to enhance and promote and make liquidity events available where there are bottlenecks in the market and where panicked investors are trying to redeem and get out. Those kinds of things, I think, are indicative of a sympathetic SEC where they certainly do understand the struggles that everyone is having here, while at the same time trying to keep their business running. I do believe, and again, maybe this is more hope than anything else, that the SEC doesn't apply the general concept of business disruption, for example, that occurs when there are blackouts or hurricanes. This is unlike any of those, and so I do hope that there is a grain of reasonableness when the examination teams come in the aftermath and take a look and see how did things fare while the disruption was in place. That always triggers for me particular areas of investment management practice that if the history is to serve as prologue to this particular disaster and situation, there are lessons to be learned. And Leslie, I don't know if we're at that phase. I'm having trouble, but
yeah, not
okay.
Quite.
So, you know, always be respectful of OCIE. We do know that exams are commencing, and they are continuing, and so far, the majority of what I have seen in that respect is it's business as usual. They leave, they have additional requests, and they are not exclusively related to BCP, but to other items they've found during the exam.
Great.
Steph, if I can, just to circle back one minute on OCIE and how they're likely to view BCPs. I totally agree that they're not going to be hopefully focused on, is it a COVID-19 plan? But I do think to the extent problems in BCPs become apparent as they're implemented or rolled out in the current environment, they are going to look at, well, were red flags responded to? If problems arose, were they addressed? And they're going to expect those to be addressed. So that to that extent, I think the agency may be inclined to take action sort of specific to COVID-19 if things arose in this circumstance and were ignored or dealt with inadequately and not fixed and allowed to fester. Those will obviously be issues that OCIE is going to dig into.
Yeah, I agree.
One of the postings on our Q&A from somebody listening, a recent document request was for copies of the firm-issued policies, procedures, and guidance tailored to address continuity of business operations specific to pandemics.
Right, so. Exactly. I mean, we're starting to see that type of, those types of questions. And so, and that, I think that question plus, Matt, what you just said is a really good take-home message for our participants today. And that is, you've had a BCP in place. It didn't contemplate this. You need to follow your BCP, but you need to be flexible and fluid in effectuating a BCP in this environment, which means you may need to, and likely will need to, revise it, have additional supplemental documents that deal with this specific business continuity issue that may vary from what you have in writing in your main document. So that's why I think they're asking about firm-issued policies, procedures, and guidance, not just give me your BCP that addresses, that addresses COVID-19. They're looking for, what are you doing to stay on top of this? What's your messaging? What decisions have you made? Have you been proactive and fluid as this pandemic progresses? Okay, so before we turn to our next topic, I just wanted to circle back on a couple of essential business items. And so I'll direct these questions, which may seem simplistic, but just to level set for a second. So Matt and Marlon, there's no requirement that RIAs and BDs stay open, right? There's no mandate that they stay open. It's a choice.
That's right. That's right.
Okay.
Some of the guidance encourages essential businesses to stay open, but there is not a requirement that they do so.
Gotcha.
Yeah, I would refine a little bit in the broker-dealer context. So it doesn't require. I don't think there's a requirement that there be in-person, in-office personnel, but I think it's tricky. There are some things that I know several have gone to the SEC requesting relief for, because while there is no requirement that the office remain open or that the in-person aspect remain, I think that there is a requirement that the business continue to function, because there are essential things that the business must continue to do. So where a customer sends a check, that, and I'll talk about this a bit more later on compliance issues, that still has to get processed. And if a customer wants to make a trade during these very difficult times, they're not going to take we're closed for business. Last time a financial crisis happened, I was still at the SEC, and we got a number of similar requests And if you want to look at another example, the tragedy of 9/11 and the events surrounding that for many firms, customers still wanted to trade and require that trading be done. And so, special measures were put in place. So I think that there is a requirement that the business continue to operate. I don't think there's a requirement that the business operate in person in a particular location, but rather it can be done in a business continuity plan.
Excellent.
And Marlon, to be clear, you're talking about requirements that the business operate separate from these executive orders designating essential or non-essential businesses. This is under the sort of the existing regulatory regime for BDs, and I think the same would apply for IAs, but that's separate from...
Right. The state orders, there's no state order COVID-related. There's no federal mandate COVID-related that directs and requires these businesses to stay open. It's part and parcel of the ongoing compliance and expectation under the federal securities laws and functional regulators. Does that sound right, both of you?
Yes, that's right.
Okay. Excellent. So, and Matt, I think you were saying that the state orders, like there's no standard, right? Each state order is drafted in its own way, different wording potentially, and not only are they all different, but they're evolving, right? So sometimes we'll have an order, then we'll have another order or an amended order. So just because you think you may have a handle on what a particular state's order says, maybe as of, let's say, March 31, you still have to keep checking back to the extent you want to have some sort of physical presence or employees with a physical presence to make sure that you're staying up on what the states are doing.
Yeah, that's very true. Each state's order, or many of the state's orders, are different, so you have to look. And I think Marlon made this point, and it's a good one, that you have to really look at the particular state that applies to your operations in that, your operations in the relevant state, and look at that particular state's order. They all tend to be a little bit different. Some, as I said, rely on the CISA guidance to determine essential business sectors and critical employees in those sectors. Others do not. Others will rely on other guidance, or will have guidance just drafted by the state itself that's unique to that state. So, yeah, you have to look at each one of those that applies and continue to look for updated guidance and updated orders. We had the CISA guidance, for example, was one thing last Friday, and it was revised over the weekend and was something different on Monday. Not drastically different, a little bit broader, but different. And so you need to continue to keep an eye on those changes.
Great, thank you. And it's an interesting point you say about sort of the relevant state order, because obviously there are businesses that have offices in multiple jurisdictions, and even if a business has an office in a single jurisdiction, it could have employees that are coming from other jurisdictions. And so when you're evaluating what is quote-unquote relevant, you could have multiple states that are relevant depending upon your office configurations and your employee locations. So that's just, yeah, okay. All right, that's excellent. Okay, so a couple of parting thoughts before we pause for, I think, a bit of an administrative break, but a couple of thoughts on this. Right, the essential business subject is really only relevant to the extent that you feel you need to have employees physically in your office locations, right? That if you're working remotely and you're swimming along fine, the essential employee analysis is not really relevant. I'll pause for a second to let Matt and Marlon correct me.
Yeah, Marlon, do you want to take this, or do you want me to address it?
No, I think that was accurate. I don't have a correction.
Okay. All right, great.
I agree as well.
Okay, fantastic. Obviously, our discussion today doesn't touch on employment law considerations or HR considerations. However, there's I think, a very helpful legal update that we've made available to all the participants on that subject. While you're thinking about work streams, what's critical, what's essential, I want to leave you with some parting thoughts on that. Think about whether remote or not, irrelevant, right? You want to think about key personnel, management succession, whether there are people with transferable skills. And I'm thinking not just, it's not a remote or physical location issue. What I'm talking about is availability of personnel to begin with. And you have to start thinking along those terms, particularly for key personnel, for management succession, who's got transferable skills, who maybe has past experiences that could be resurrected, maybe reliance on affiliates or other third-party service providers, whether they're new or existing with a possible expansion of service scope on that subject, service providers. Again, there's another very helpful legal update that we've made available as part of this package that talks about what we're seeing in the vendor space in terms of renegotiating and seeking waivers for work-at-home situations for the vendors and contractors. And obviously, since we're in a regulated environment, you need to keep your disclosures current on the status of your operations, key man and management events, financial strength, and the like. Any other thoughts?
And, yeah, just to mention there again, not to get into the HR issues, but I think everyone needs to assess when and under what circumstances and regarding which professionals any pressure would be brought to bear for any to come to the office or show up with other people. There's always a concern of whistleblowers, and that can escalate and mushroom. And of course, nobody wants to put any employees in a position of any kind of health risk whatsoever. So I hope that nobody on the phone is either feeling the pressure or exerting the pressure for in-person visits in the office, whether they're key men, whether they're critical to the business, health first.
Yep, very good, very good. Thank you for that, Steph. I think we've fielded questions, and we're seeing some questions on force majeure. We do have some helpful information that our colleagues have drafted and have put out there. We'll try to round those up on force majeure clauses in contracts. Okay, so let's turn now to some select compliance matters that we think registered advisors should keep at the forefront of their minds during this challenging time. And for that, I'm going to turn it over to Stephanie Monaco.
Thanks, Les. And you're not turning it over. This is a very interactive discussion that we have here and that we're going to have. I always start off when I think about the historical times when we have gone through complete market dislocation, where valuation is uncertain, unreliable, unavailable, that so many bad things can stem out of changes in policies and procedures concerning the valuation of assets. Obviously, most advisors, their fees are based on the value of the assets under management. And an advisor that has a very challenged bottom line, which many will have following this during this crisis, the SEC, and again, can't kill the messenger. This is just the approach that I think the examination staff has when they come in and do examinations of advisors after the crisis has passed. And one thing that they look at very, very closely involves the valuation process. Was there a written procedure and process before the crisis occurred? Did it change during the crisis? Were there exceptions to it? Were the exceptions documented? Because they understand that at the core of many conflicts of interest lies the valuation of assets. What stems out of that? Of course, fee calculations. The most conflicted of all activities that investment advisors engage in is how do they charge for their services and where can they maximize their compensation and appreciate their bottom line. The other area is in performance. There are going to be circumstances where obviously the valuation of the assets and the portfolios under management are going to have significantly reduced performance during this time. So again, that stems out of the valuation of the assets to begin with, both before, during, and after the crisis. Those are areas where, as practice pointers, it would be best not to deviate from valuation procedures. If you do deviate, compliance certainly should be involved in that. Sometimes any deviation from a valuation procedure might force an advisor, at least in terms of best practices, to go and get an independent valuation if the portfolio securities are illiquid and you can't find a value for them. Again, recognizing that the advisor is inherently biased in determining what the value of those securities and portfolio holdings are. Those are two of the issues related to valuation. I can pause here and invite others to comment upon valuation issues.
Right. So a couple of thoughts. One is, I think, I thought it was interesting this morning, Chair Clayton published a statement regarding financial reporting in light of the impact of COVID-19. He listed a number of accounting areas that will involve, quote unquote, significant judgments and estimates in light of the evolving status of COVID-19. And I thought that was a helpful list for compliance and legal personnel to review and think about as you're addressing all of the things that Steph was just mentioning. The other thing that I would mention is that I think it's important, particularly for the performance presentation side of the equation, I would put a calendar reminder, some sort of notation or reminder for you when you start seeing performance for this period, as well as performance of alternate periods in the future where you might have marketing personnel seeking to exclude this period from a performance presentation. We saw that back in the financial crisis, and I'm going to guess that we'll see those types of attempts with this one. So I'll pause there and turn it back to Steph.
Yeah, well, on the performance point, again, the past is prologue, and during Black Monday in 1987, when the market fell through the floor, performance of investment advisory accounts similarly fell through the floor. 10 years later, 1997, obviously in a 10-year time frame, that performance continued to be included in a 10-year track record. The advisors with backbone, I think, and with integrity, in 1998, when they could have lopped off the lousy performance from 1987, kept it in, because in the ensuing 10 years of recovery, performance gradually and sometimes more noticeably increased. And so there was great expectations for the 11th year so that most advisors would be able to lop off that terrible performance. Again, those with integrity in my judgment anyway, they continued to show, instead of 10-year track records, 11-year track records, so that there was no misleading impression that the ensuing 10 years that were very good and positive would continue that way. That is just an area to be very concerned about, and any changes in process, I think, will be very closely scrutinized. I also want to just talk a moment about, again, the past being prologue. When markets have had dislocated valuations, when liquid securities have turned illiquid, there has been in the past, and likely will be, we've gotten fielded calls of similar things, where you have some clients that are panicked or for whatever reason want to get out of everything. And you have other clients that are fully discretionary clients. Frequently, investment professionals become enamored with some of their portfolio holdings, and they don't want to get rid of limited opportunities. So what do advisors do in those circumstances is frequently they will engage in cross trades. And that is a way to generate liquidity for the investor that wants to sell everything, but yet to continue to hold on to what the portfolio manager has come to believe is a very good investment that he can't find anywhere else, and put it into another account. Right off the top, cross trades, it's probably best to think of it this way. Cross trades under those circumstances with a registered investment company portfolio, or with an account that is subject, is covered by and governed by ERISA, and for IRA accounts, cannot occur. It's just best to simply think of it that way. Otherwise, you run into circumstances of orchestrating what you hope will be viewed as an open market transaction when in fact it's not. So there have been some cases in the past where the trader called up a dealer and said, I'm selling this particular instrument. I won't be specific. And, oh, by the way, while I can't do it right now, tomorrow at the same time I'm going to come back and buy it for another account. That is an illegal cross trade. If it is an illiquid security, it doesn't otherwise conform to the requirements under the Investment Company Act when crossing with a registered fund, and it can never be done with an ERISA-governed or IRA account. Other clients, let's say we're not talking about any of those regulated entities as a buyer or a seller, with disclosure, if the ADV allows it, and if you have cross-trade procedures already in place. That would be a general rule of thumb.
Yeah, and good luck trying to value that, even in a cross-trade situation. Thank you, Steph. So before we turn it back to Marlon for a couple of thoughts about compliance matters on the BD side, just wanted to mention, other things that we're seeing from an RIA compliance perspective. Obviously, portfolio limits, leverage and asset coverage requirements, compliance with investment restrictions, all of that has become more and more challenging in this environment. In addition, from a remote work perspective, just wanted to run through a couple of subjects for you, some of them obvious, some of them less so. Obviously, confidentiality and privacy, cyber and information security are utmost importance. Insider trading, and I'll pause in a second so that Matt can comment on that, but also think about effective supervision in a remote environment, communications and the like with clients, e-delivery, e-signatures, affecting notices, consents, and approvals, and of course, in a remote environment, have to think about record keeping. Matt, a quick word, if you wouldn't mind, on insider trading, and then we'll turn it over to Marlon to close us out on BD compliance issues.
Sure. The insider trading is something that the SEC is looking at carefully right now. And on the 23rd of March, the co-directors of the Enforcement Division issued a joint statement about the importance of maintaining market integrity and internal controls. And although it was focused largely on public companies, it's also applicable to registered entities as well. They made several points. First was that in the current environment, material non-public information may have greater value even than it normally does in terms of how COVID-19 impacts operations at entities that are invested in, public companies and others, and some of the relief that the agency has given, allowing for extensions of time to file certain periodic reports, say, with the agency, means that material non-public information like earnings perhaps and other things may remain confidential for longer. Also, you've got people who are going to be in the insiders who are working remotely outside of the normal office environment. And in the context of that, they want to make sure that entities are carefully following their policies and procedures for protecting material non-public information from misuse, monitoring for insider trading, blackout periods, things of that nature. And so this is very much on the radar of the SEC right now, and they're going to be looking at all kinds of market participants and registrants to make sure that they're protecting material non-public information and not illegally trading on it. And that's also reinforced, obviously, by the news that came out recently about senators making personal trades after receiving intelligence briefings where they purportedly received material non-public information, and investigations that have been launched into that. So that's a high-profile topic that the SEC is very focused on.
That's very helpful, Matt. Thank you. So, really, all joking aside, when your significant other or college student is looking over your shoulder while you're working, push them aside and call your CCO. Moving on.
There have been those cases too, where with insider trading involving one spouse learning things from his spouse's computer and then trading on that information. So
yes, indeed. All right, so Marlon, take us home with some BD compliance matters for folks to think about.
Thank you, Leslie. On the time we have, let me just mention some high-level considerations that you ought to keep in mind. First and foremost, your operational readiness. Obviously, most of you have now dusted off your BCP, your business continuity policies. They're unlikely to have referenced global pandemics. Kudos to those of you that have, but most do not. What we would recommend now is that you document measures that are being taken, and try to demonstrate compliance in those measures, those communications that you are doing internally with, all of the associated persons and broadly within your firms to show that compliance. We also encourage good communication with your customers. How are your operations functioning? What are the limits? Turning to supervision. You'll have personnel at various quote-unquote offices working remotely for a prolonged period of time. Much of that was not envisioned. Are those locations branches? Are those offices of supervisory jurisdiction or non-office of supervisory jurisdictions? I think you ought to think about that, and I know some of you already are. On operational, as we had mentioned earlier with the stay-at-home orders, the regulatory regime doesn't stop. And many of us have been looking for some relief from the SEC. And for some things, the SEC is saying it's not coming. So Reg BI, for example, I and others have been, asking the SEC for some relief. The SEC noted yesterday that the June 30th, 2020 compliance date for Reg BI and other requirements, including the requirement to file and begin delivering Form CRS, remains appropriate. So on this point, we are engaging with the SEC on behalf of some of our clients that are unable to make, filings or meet other requirements because of disruptions caused by COVID-19, or because of efforts to comply with national, state, or local health and safety directives. But the point to you is you ought to be engaging with your regulator now. Don't wait for the exam. Don't wait for them to ask you, how did you comply?
Exactly.
Proactively engage now so that you can have this done, in a way that protects your ability to comply. The last topic I mentioned, I know we're slightly over time here, is adherence to financial responsibility rules. Again, being at the SEC during the last financial crisis, this is probably the most important thing that people are going to look back upon. The customer protection rules, both for carrying and introducing brokers. Look, you've got to promptly reduce customer access to possession or control. Some of these customers are sending you physical checks. Who's going to that, mailbox? Who's ensuring that check is deposited by tomorrow 10 a.m.? Brokers that are relying on the, K2I exemption or K2i exemption have to forward those checks by noon the next business day. Who's doing that? Especially in light of some of these, shelter-in-place orders or the restrictions on essential businesses. Consider the implications there, and if you need relief, look, the SEC has provided some relief. There's an exemptive order for transfer agents and certain persons affected by COVID-19, fingerprinting, for example. There's also some relief for, CATs. The CAT NMS plan deadlines have been relaxed a bit. But most of the things the SEC is considering business as usual. So think through your operations and your compliance, and most of all, supervision. Leslie, I'll turn it back to you.
Great. Well, thank you very, very much. Likewise, the SEC has provided a number of different forms of relief on the registered fund and registered advisor side, and also a reminder, keep looking at the custody FAQs. The staff keeps updating them for questions regarding how to deal with custody issues in the COVID-19 environment. Rebecca, I'll turn it back to you for any closing remarks.
Sure. Thank you, Leslie, Stephanie, Marlon, and Matt, for your thoughtful analysis and valuable perspectives. And with that, that wraps up today's program. On behalf of Mayor Brown and our speakers, thank you very much for your time. I hope you found this program useful. You'll be receiving a recording of this program, as well as it'll be posted to our website in the coming days. Thank you for your participation. This concludes our program.